This is the cold, hard truth about return in 2025. And things are a lot different today than they were 30 days ago. So, as I record this, Trump has just announced what the tariffs are going to be for other countries, and the stock market is down 10% in 2 days. So, what's the truth about returning in 2025? You need to be real careful. And this is coming from somebody that was a financial advisor for over 20 years and somebody that's a believer that retiring sooner rather than later is something many of us should think about. And somebody that believes that the four most dangerous words for would be retirees is just one more year. But this year might be an exception. And let's talk about why. You know, retirees, recent retirees have two enemies, and those two enemies are inflation and what's called sequence of return risk. So let's talk about the second one first, sequence of return risk. And that's just a fancy way to say you got unlucky. And nobody can control whether we're going to be lucky or not. But with sequence of return risk is when we first retire, we likely have the largest asset base that we're ever going to have, right? Because we've been saving up and hopefully we start spending some of that money. Now, in reality, oftentimes for the first 5, 7, even 10 years, your base continues to go up. But when our assets are the highest is when we're at the most risk of being hurt by negative returns in the stock market. And you may have heard of something called the Monte Carlo simulation, where financial advisors try to share with somebody, hey, here's your probability of being able to successfully retire and not have to worry about running out of money. So typically it's, 85%, 90, 95%, 97% likelihood of success is probably the gold standard. But the way financial advisors do this is they use statistical tools, but the cases where people run out of money, right? 97% is not 100%. So those 3% cases where they run out of money tend to be where they got bad returns early on. So sequence of return risk is a real thing. And we are doing an experiment on the economy right now. And this is not a political channel. I can see an outcome where this all ends up being very positive, and I can also see an outcome where it ends up being negative. But what I do see is a lot of uncertainty. I think we're going to know a lot more in 6 months or 9 months than we do today. We don't know how much risk is going to be there, right? The first move of the tariffs have been made, which is the United States announcing what those tariffs are going to be on other countries. The second move, which is what the other countries are going to say, we've gotten some of that. As I record this, China just came out with what they're calling their retaliatory tariffs. So that's the second move. But then there's third moves, fourth moves. It gets very complicated. And I think a lot of this is going to play out in the next 100 to 200 days. And one of the things is, what are the manufacturers going to do? What are the retailers in the United States going to do? How much of this are they going to absorb? And how much of this are they going to pass on to us? And that's going to impact inflation. Then another question is what's going to happen to interest rates, right? Jerome Powell came out today as I record this and said, because of these tariffs, we need to pause what might have otherwise been a rate decrease and see how things play out. So we've seen the first move. We can probably guesstimate what the second move is, but it's really hard to think about, what's that fifth, sixth, seventh, eighth move? People that are really good at chess, and I'm not one of those people, they can visualize, what these next moves are in different scenarios. And as complex as chess is, the world economy is much more complex, and none of us know how that's going to pan out. So that's the first thing, the sequence of return risk. The second enemy of retirees is inflation. And it seems to me, again, not political channel, but it seems to me that costs are going to be going up. And if cost goes up, that means inflation is going to be going up at least for the next little bit. Now, we may not see it for 100 days. We may not see it for 3 to 6 months, although I'm reading reports in financial magazines, financial journals, that many companies are already passing along what they predict to be those costs. So the inflation increase, I think the Federal Open Markets Committee up until now has done a pretty good job of bringing down the post-COVID inflation, which was almost 10%, down in the 2 to 3% range. But I think this throws in a lot of uncertainty. Excuse me, I'm in the Pacific Northwest. You're going to hear a train come by. But it definitely throws in a lot of uncertainty into what inflation is going to be in the future. So as I record this, I retired 9 months ago. I retired before the elections. Um, Frankly, 9 months ago, it was a very different world. We had different uncertainties, and now some of those uncertainties, who's going to be the president, that's been answered, uh, and now we have what's going on. There's a different set of uncertainties, but I would argue again, and I'm somebody that really believes in, you know, another enemy of would-be retirees is just one more year. You have to be super careful. But there are periods of time that you say, you know what, maybe pausing for 3 months, certainly before you tell your boss, before you tell work that you're going to retire. This may be a period, and I'll share something with you that I've only shared in one other video, and it was actually recorded recently, to me recording this one as well. But I had given serious thought to retiring in 2020, 2019 being my last year, and then retiring in December or January of 2019. Um, and my wife was already retired at that time. And I chose I was falling victim to some of the things that I share with other people to be careful of, which is I was falling victim to just one more year. I was 54 at the time, 55. I think I was 54. Uh, and I thought, you know what, both of my kids are in college, and I want to see how that transition goes. I certainly didn't see COVID happening, but once COVID happened, I said, this is not the time to retire. Now, in my case, it ended up taking away 4 years of what could have been, and what I talk about, the youth of our senior years. I ended up retiring at 59. But I think for me and for my family, that was the right decision, certainly in the early days of COVID, because of all the uncertainty. And then you couldn't travel, which is one of my main passions. You couldn't travel. And frankly, I've always liked my job, and being able to work remotely for the first time in over 20 years of being a financial advisor, that was COVID was a horrible thing, but being able to work remotely was something new for me, and so I really enjoyed it. So there are times that it may make sense for you to pause on the retirement decision. This is not financial advice. I don't know your situation, but put on your radar screen the things that I've said, the uncertainty that we're seeing right now, and think about, could you make a better decision as to whether or not this is the right time for you to retire in 100 days? In 4 months, 5 months, uh, maybe even a year. And I am not somebody that normally would say, maybe a pause for a year. But in this case, I think it's worth at least being deliberate and making a conscious decision to decide what's right for you and your family. If you enjoyed this video, the YouTube algorithm says this is the next video of mine specifically for you that YouTube thinks you'll enjoy watching next. Thanks for watching this one. Bye-bye.